Persistent system is up around 10% because they reported a beat versus expectation. Mr. Sandeep Kalra, the CEO of the company, is joining us to talk to us about that. Sandeep, before I come to your earnings, talk to me about the overall demand environment and how you think calendar year 24 will pan out with respect to client budgets.
So please keep in mind, in any kind of an economic situation, a weak macro or a bad macro, there are companies that will outperform their peers. So for that, for example, in our case, on one side, we are very closely watching how the budgets are panning out, and the budgets may remain stagnant or may increase by a little bit. But then in a weaker economy, there are revenue pools that are available. So for example, one of the channels that is kicking very well for us is private equity. So when the market is weak, there are many carve-outs that happen from companies that have weaker balance sheets, newer companies are formed and so on, and that spawns off a new set of work for us. There are newer technologies like AI and generative AI, where people, while they're shrinking their budget, they are still trying to squeeze more from business as usual and put towards more revenue enhancement based on the newer technologies. So while the budgets, we don't expect them to go much higher from where they are, we expect the weakness to continue for another couple of quarters and then green shoots to emerge in different sectors. There are ways and means by which we are addressing our efforts in our client base differently to make sure that we have a healthy growth, weak macro or good macro.
Right. So are you saying that your order win rate has improved? Do you expect the deal momentum to remain sustainable?
Right. So there are two parts to it. One, if you look at our sales and marketing spend is at a heightened level if we compare 9 months of this financial year to the 9 months of last financial year. And why is it so? So if you look at the deal wins, they are a function of how much deals you bring in and then how much you convert from that into actual win. So if there's a weak macro, you need to bring in more deals so that even if lesser of them convert or they take more longer period of time, you're still having a healthy pipeline. And that's what we have done. So from that perspective, on one side, we have expanded the pipeline. On the other side, we have had good deal wins as a conversion. And look, we don't give forward-looking guidance, but if history is anything, 15 quarters of sequential growth in revenues and stable to increasing profits is what we have delivered.
Yeah, that trajectory has been really stellar when it comes to the time gone by. But Sandeep, the sales and marketing spends that you talked about, right? That's bound to limit your margin expansion. And on one hand, the analysts are expecting that over the course of next 12 to 18 months, there should be a margin expansion to the tune of 100 basis points. Your comment to that?
If you look at the sales and marketing spend, while the sales and marketing spend is at a heightened level compared to the prior, year, we have worked on the utilization. Currently, our utilization is at 81.5%. Even that has scope to improve over a period of time. Now, if you look at our SG&A, as the market stabilize, and as I just said, over the next 2 to 3 quarters, as the demand comes back, our SG&A would also give us the leverage. So we will not have to invest in sales and marketing to the extent that we would have otherwise. We have already invested. That will give us the leverage. And then there is a significant amount of new leadership that we have brought in, capability build that we have done. And so from that perspective, that should give us the leverage to increase the margins from here on as well. And look, to run a good company means on one side, you're delivering to the revenues. On the other side, you're looking at every part of your operation and optimizing it on an ongoing basis. And that's what we are doing.
Right. And given that your client metrics have worsened a bit, both in terms of the top clients as well as the number of the 30 to $20 million clients, what's the outlook?
So if you look at the overall metrics, I wouldn't agree that the client, metrics have, deteriorated. Over a period of time, there are quarters when we see furloughs, and traditionally for us and for every one of our peers in the industry, the Q4 calendar in the US, which is Q3 for Indian financial, is the weak quarter from a furlough perspective. That does have an impact on the client, category mix going here or there. But if you were to look at just one data point, the top 50 customers for Persistent gave us 3.4% quarter-on-quarter growth compared to the 3% for the full company. So from that perspective, even top 20 customers gave us 4.7% quarter-on-quarter growth. So there are enough and more metrics that point to a very healthy, growth, both in revenues. And if you look at our deal wins at $521 million in total contract value, this is the highest we have seen in our company so far.
Deal wins have been strong, but you did talk about furloughs in Q3. Any indication that furloughs might get extended into Q4? And any early indication how Q4 is likely to pan out?
We don't give forward-looking guidance. So I'll not go there as to what the Q4 will pan out. But if you look at a few things, you asked, number one, furloughs, significant amount of furloughs for us will have concluded in Q3. And even if small bit, tad bit continues in Q4, that's business as usual. We'll take care of it. Now, as far as the growth is concerned, look, if we are announcing healthy deal wins, that deal wins has to translate into revenue, and I just leave it there. We don't give forward-looking guidance, so I cannot give you any quantitative color on that.
Right. And in terms of, the geographies, Europe has been weak and so has been BFSI. Tell us a little bit about, the key vertical trends, the key geographical trends that you may be witnessing.
If we look at Europe, traditionally, it has not been the strongest hold for us. We are investing in Europe. We hope and expect that over the next few years, we'll make it a position of strength for us. And, even if you look at our management addition, we brought in a senior leader to head Europe as well in the quarter gone by. Now, in terms of industry verticals, we've said it over the past several quarters, healthcare life sciences will lead the growth for us for the next several quarters, followed by technology companies, followed by BFSI. And that is the trend that we are seeing in our order book, and that should pan out for us as well.
All right, good to have you on board. That's the view coming in from the management of Persistent. And take a look at the stock as well. They're going to outperform their peers. They're very confident of that. And is looking that green shoots will be seen in a few quarters. Deal wins as well will remain steady.